All right, here is the objective test question for another 4 questions on the financial management environment. So let's move on to question 7. 3 statements, okay, which are correct. First, a certificate of deposit, the CDs here, sometimes we call CD, is an example of money market instruments. Okay, what is money market instruments first? Okay, it is the instruments with short-term maturity that is less than 1 year time. So for certificate of deposit, okay, in general, it is less than 9 months. In other words, it is the instruments under the money market instruments. It's true. Second, money market deposits are short-term loans between organizations such as banks. Yes, money market deposit, it is short-term loans and it's mainly between banks. It's mainly between banks. For example, the bank, there's maybe there's a free bank A, B, C, and there's a requirement of the capital reserve. Maybe say the central bank requires to have 20% of the reserve in each bank and on every day. But on, say, for example, on 2nd of February, for Bank A, it is 25%. For Bank B, it is 19%, and Bank C is 21%. So for Bank B, it is below than the requirement. So it needs to have, it needs to ask the other to provide the funds to it. And Bank A say, hey, I would like to deposit into your bank. So to raise your ratio, to increase your ratio to 20%, then it's the money market deposit, which is a short-term loans between the organizations. Right? See here is the bank. So it's true. Third, treasury bills are bought and sold on a discount basis. For treasury bills, if it is traded, it's generally at a discount basis. Why? Because it is not at the maturity. For example, at the maturity, the treasury bill is worth $100. So any buying or selling before the maturity, it should be at a discount of $100 basis. Okay? So it's true. So the answer here is D. Question 9 is asking which of the following is or are usually seen as benefits of financial intermediation. So for financial intermediation, what's the role of it? Funds pooling. Okay, because we have a lot of individual depositors, and if they can pool up in a bank or financial intermediaries, then the bank can manage the funds to lend it out to different institutions with with the demand of a large amount of money, not from each individual. So funds pooling is one of the role or functions of financial intermediation, and the second is the risk transformation or risk pooling. Okay, the financial intermediaries can help to transform the risk or pool the risk together and manage it well. Third one is to transform maturity, because for individual depositors, they prefer to have short-term deposit. But for the borrower, they would like to have long-term loan. So in other words, the financial intermediary can transform the maturity. And here, what we check here is number 2 and number 3 is correct, because we just mentioned risk pooling and maturity transformation. How about interest rate fixing? Financial intermediation, okay, they cannot fix the interest rate. They cannot fix the interest rate, because the interest rate is determined by the market force, supposed by the market force, and also the central bank, the money supplied by the central bank as well. So for the interest rate fixing, the financial intermediation has no right to do it. So it's not correct. So the answer here is 2 and 3, C. Number 10. Governments may have a number of economic targets as part of their monetary policy. And which of the following targets relates predominantly to monetary policy? Okay, monetary policy, again, we repeat again and again, it's about the money supply. It's about the interest rate. Other than these two topics, they are not monetary policy. So first one, increased tax revenue is not correct, okay? It's not under these two topics. Second, controlling the growth in the size of the money supply, yes. 3, reducing public expenditure, no, okay? It's not under these two topics. Keep interest rate low, yes. So the answer is 2 and 4, which is C here. Next question, question 15. There are 4 statements, so please advise which statement is true and which statement is false. First statement, a prospective merger would need to result in a company having a market share greater than 80% before it can be described as a monopoly. So what's the answer of this statement? Is it true or false? It's false. So what is monopoly? If it is a monopoly, it is only one supplier in the market. So the market share should be close to 100%. Okay. So it's not correct, because it is not a definition or description of a monopoly. It is really only one particular in the market to supply the goods to the consumer. Second statement, a government may intervene to weaken its country's exchange rate in order to eliminate the balance of payment deficit. Is it true or not? If an exchange rate is weakened by the government intervention, it helps the export. And export increase, it helps to reduce balance of payment. So it's true. The third statement here, a relatively high rate of domestic inflation will lead to a strengthening currency. Okay, it's about what is about the PPP, purchasing power parity. We studied it before. Is it true? Is the inflation increased or high rate will help the currency to be strengthened. According to PPP, is false. Okay, high inflation of a country, its currency will be depreciated or weakened against the other country, against the other currency where the inflation is lower. Okay, so it is false here. Government fiscal policy involves the management of interest rates. Okay, we talk about different questions in financial management environment. We all know that for fiscal policy, it's about the government income and expenditure. It's not relevant to any interest rate, so it is false here. So if you answer them all correct, and congratulations, you get 2 marks. Okay, so let's go to the final part of the revision course. It's about the summary. And in this class, we went through general part, the questions in the business valuation. We also went through the objective test questions. So you have to know some key topics, for example, the valuation method, including the earnings method, that's PE ratio or earnings yield. The dividend growth model, the NAV method, and also you have to know the PV, present value of discount cash flow method. Also, we also mentioned about the efficient market hypothesis, about weak form, semi-strong form, strong form. We talk about the technical analysis. We talk about the fundamental analysis as well. So you should familiarize with these key terms. And after completing the business evaluation, we finalize our course by repeating or by describing the financial management functions and financial management environment, in which they are the first 2 areas in the syllabus, but I would like to put them back at the back because I found a lot of those questions are summarizing the whole syllabus. So it's much better for us to review these 2 topics, as well as reviewing the other concepts as well. So we go through the financial management functions and financial management environments. We know what is the shareholders' wealth. The financial objective and non-financial objective. Okay, agency problem. Okay, even we don't mention this term agency problem, but we mention about the performance related payment, dysfunctional behavior, okay, all these are agency problem, because agency problem means the managers or the management, they manage the companies on behalf of the shareholders, but is their rewards are linked to the share price? If not, then any performance related payments or any financial rewards will have the dysfunctional behavior or agency problem here. And we also discuss about the financial management environment. Okay, for example, we discuss about the market competition environments like monopoly, oligopoly, like we discuss about the market failure, we discuss about the green policy, and we also share with you different policies like monetary policy, and fiscal policy, and it's very important for you to differentiate these two policies as well. And we share financial intermediation. What is financial intermediation? What's the role of it? What kind of institute is falling into the financial intermediations? And I hope, okay, all this revision topic is helpful to your final study or your revision of the ACCA F9. And good luck to all of your exams. Thank you.